Hello, dear investor. Hope you're doing great. Hope you're having a great day. So, without taking much of your time, we're going to get right to business of today. Recalling my earlier video, I had talked about the three innovation types as identified by Clayton Christensen in his book, The Prosperity Paradox. Now, the three innovation types highlighted were sustaining innovation types, efficiency innovation types, and the market creating innovation types. I also highlighted that I was going to be making subsequent videos where we're going to be discussing each of these innovation types, what they mean for a nation, for a business, and how it can apply to you as an investor. So for today, we're going to be discussing the first one, which is the sustaining innovation types. So I hope you grab your cup of tea, coffee, juice, whatever suits you. Come closer and let's start. What is the sustaining innovation types? Now, the sustaining innovation types generally speaks to the kind of innovation that focuses on incremental improvement on an existing product. What this basically means is that for an economy of an organization, for easy understanding, I'm going to be using the context of organizations more in this video. So for an organization, so it means that an organization already has an existing product, they are not creating a new product, and they go on to continually make new features, like improve the features of the product to cater to existing customers. Mind you, these new features can also attract new customers. I'll give us an example. An example is our iPhone. When the iPhone first came out, it was a new product. But over the years, iPhone has gone ahead to make several models. And the one thing that differentiates one model from the other is the new feature or new features that are in the model. Currently in 2026, you have the iPhone 18 that's coming out sometime in September, as I hear, right? And the difference is going to be maybe one feature, two features that are added that differentiates it from the current maybe iPhone 17, iPhone 17 Pro Max. Now, as an iPhone or an Apple customer, an iPhone user, this would make you want to go to get an upgrade. Also, for someone who's never had to use an iPhone, maybe the new features in the iPhone 18 could be so enticing and interesting and could attract new customer to Apple. Now, why is this sustaining innovation type very important? That's because for an organization, this guarantees almost steady revenue because they have an existing customer base that are loyal to them. So they have steady revenue, right? And this can also almost guarantee steady profit margin, steady market share. And also, like I said, it has the probability of also attracting new customers. What does this mean for you as an investor? As an investor, this is that boring, not very exciting investments in your portfolio. But these are the investments that give you the right grounding and foundation. These kind of investments are not doing the radical return on investments we see, maybe not doing 100x, return in 6 months, 100x return in 1 year. They add consistent incremental return on investment to your portfolio. Example is your S&P 500 index fund. Your S&P 500 index fund, based on historical data, shows that it adds roughly 8 to 10% every year to return on investment to your portfolio. Then you have your retirement accounts, right? You have your pension accounts. Now, these different form of investment, they are not doing something radical, but what they guarantee is that you are consistently making increments to your portfolio, building your portfolio gently, and providing you with the right foundation should in case any of your other risky investments don't turn out the way you envisage. It ensures that you don't get to start from scratch. It ensures that you are able to sustain the kind of lifestyle that you have built over time. So it doesn't perform magic, it is consistent, it is incremental, and it is stable. This is important. Now, somebody may ask, so what percentage of my portfolio should have sustaining investment? And I'll say this depends on your age, your earning power, but a big part on your age. You have There is this rule of thumb that the younger you are, the more risks you're open to take, right? Even though we have exceptions where you have younger people who are very risk averse, right? But the rule of thumb. So if you're younger in your 20s, maybe you can have about 30% of these kind of funds in your portfolio because you can afford to take more risk. But maybe if you're in your 40s, and you're looking to now consolidate your portfolio, you're not looking to take crazy risks at this time, you're already looking at retiring in a couple of years or decades, right? You might want to consider having maybe up to 40 to 50% of your portfolio having this sustaining investment. So you see that as an investor, the journey to building wealth can be gradual, right? It doesn't happen sporadically. It is not magic. It has to be a gradual process of making the right decisions that suits both your lifestyle, your long-term objective, as well as what your portfolio looks like today. In our next video, I'm going to be highlighting, talking about clearly about the next type of innovation type, which is the efficiency innovation type. This particular innovation type, from an investment point of view, can be a trap for retail investors. And I'm going to deep dive into it and explain why that is the case. But before I end this video, I just want to ask you, so as an investor, you have your portfolio. What percentage of your portfolio has these sustaining investments? Just put your number in the comment section. I'm really curious. I just want to see what the split look like. Is it 20%, 30%, 50, 60? And if you're okay, you can maybe just put your age range if that is okay. But if not, just put the numbers and that is okay as well. And I hope this video was really useful to you. I hope you learned something new, and I hope to see you in the next video when we're talking about the efficiency innovation type. So stay put, like, share, follow my page so that you don't miss out on any part of this video series. Until next time, investor, have a beautiful day. Bye.